I would like to welcome you to National Mortgage Professional Magazine's webinar titled Electronic Appraisal Delivery Today, sponsored and presented by Bureau's Real Estate Solutions. I would like to thank all of our webinar attendees for taking the time out of their busy days for this valuable and informative webinar and our ongoing series of webinars. Today's webinar is being conducted by Chuck Rumfola and David Rasmussen of Bureau's Real Estate Solutions. Chuck Rumfola is the Senior Vice President of Strategic Initiatives at Bureau's. He is the former Vice President of Single Family Initiatives and Product Development at Fannie Mae. He oversaw Fannie Mae's Business Transformation Office, directing the design, implementation, and management of key SF programs, including UCDP. David Rasmussen is the Senior Vice President of Operations at Bureau's. He is an expert in collateral valuation and automated valuation technologies. He is also a frequent contributor to NMP's Value Nation column and a Microsoft Certified Systems Engineer. I would now like to turn the webinar over to Chuck Rumfola.
Thank you, Beverly, and thanks for having David and I speak today. We have a lot to cover. We have a deck that we will go through. It's going to be focused mostly on appraisal, collateral-related activities and processes. As Beverly had said, I actually worked for Fannie Mae for 20 years before moving over to Bureau's. So in going through the appraisal-related activities today, I think I bring somewhat of a unique perspective. I've seen what's going on the GSE side. Besides working at Fannie, I headed up the UMDP program that we'll talk about later in the presentation. And in doing so, I worked very closely with Freddie Mac since I was a joint initiative. So I have both the Fannie, the Freddie, and the vendor Bureau's perspective on this. So I think that is a little bit unique. We split the presentation up into two different sections. I'm going to be providing more of a macro view, what happened in industry, how did we get to where we are today, what should we expect going forward, and then David will complement that by going through some of the more micro perspective on talking specifically about some products and services that are offered in the marketplace to deal with appraisals and the processes that support that. On the next page, you'll see that there's a really good quote. I like this quote, and it really represents the laser focus that's going on right now regarding loan quality. The quote is from the Department of Treasury, but it's not just the Treasury. There's a huge focus on loan quality with the GSEs. We'll talk about more specifically what their efforts are related to this. But also, you look at the regulatory bodies, CFPB, you have qualified mortgage, QRM, you got work going on in the PLS markets. There's strong support now going on with GSE reform. All these things are really converging, and loan quality is right at the middle of it, which is why this is such a good topic for us to discuss today. On the next page, I always say that it's really good to start with the foundation. And if you look at the foundation of loan originations, if you know anything about credit, the income, employment collateral, if you have a really good sense of that information, you can really manage your risk, and those are really the fundamentals about in regards to managing the risk. If you look at what happened, sort of the pre-market collapse on the credit side, you really had the subprime industry taking off. You had FICOs really going south of 600, even down to the low 500s and upper 400s. On income, you had a lot of stated products, really no income verification. Same with employment, there are really lax standards in terms of employment validation. And from a collateral standpoint, with appraisals, you really saw a deterioration in quality of the appraisals, which really led to inflated values. That was really, those four things were really the recipe for disaster, and we don't need to relive it, but we know that the market collapsed, and things have changed drastically since that market collapsed. From a credit standpoint, you've seen subprime essentially disappear. The GSEs have implemented FICO floors. First it went to 580, then it went to 620. They are definitely tightening their credit standards. From an income and employment standpoint, we are back to full documentation, some would argue over documentation. The loan files now that are being created are very thick, and there's just a lot of supporting documentation that has become part of the process. From a collateral standpoint, this is an area that has gotten a lot of focus in the last few years. We're really going to dive into this. But at a macro level, you had the Uniform Mortgage Data Program being created, a mandate from FHFA, requiring Fannie and Freddie to do a couple things on the appraisal side. We'll talk more specifics about this, but from a high level, the two things that really came out of that program were the Uniform Appraisal Data Sets and the Uniform Collateral Data Portal that Pharos partnered with the GSEs and built. Moving on, why is there so much focus on appraisals and collateral in general? And the reality is that after the market crash, Fannie and Freddie took a look at a lot of loan files on loans that went into default. And they're really trying to figure out what the heck was going on. One of the issues that they saw over and over again was related to collateral. They weren't in a position to collect data. The appraisal was completed, but it just went in the loan file, and there was really no checking of that appraisal before the loan was purchased or securitized by the GSEs. As I said before, during that market run-up before the crash, there was a lot of issues in terms of the valuations on those appraisals, and we saw a lot of what was referred to as appraisal bias, where you saw appraisals essentially inflated in the 10 to 20% range. Now, why is that important? Because if you're a borrower and you have little or no or even negative equity in your property, if you have a life event that affects your ability to make payments on the loan, you're really left with limited options in terms of what you can do. So if you have little or no equity in your home and you either lose your job or you get divorced or there's a death in the family, or even if you have an adjustable rate mortgage or a subprime mortgage that has an upward adjustment in the payments and you can't afford that, then if you don't have any equity in your property, you don't have any choices. You can't sell your property because you owe more on it than it's worth. You can't refi because from an investor standpoint, who wants to take on that additional risk knowing that you're already operating on a pretty thin margin? So from an investor standpoint, after you've seen the higher delinquencies and defaults and you've seen these loans go bad, if there's no equity in the property, now you're facing massive credit losses, which is essentially what the GSEs faced during the crash. Is they had higher delinquency, higher defaults, and on those defaults, they had higher severity on those loans, which generated the credit losses, which meant that the federal government had to come in and the GSEs went into conservatorship. So, the GSEs knew at the time, Fannie and Freddie, FHFA knew at the time that appraisals were critical, and if there were issues with appraisals, because it meant so much in terms of managing the overall risk and managing the credit losses, they knew that the existing process had to change. And now, on the next slide, we'll go into specifically what those changes were. So back in 2009, knowing that we had issues with appraisals, FHFA told Fannie and Freddie, hey, you guys need to work together. And you guys need to work together to fix this appraisal problem that exists today. And that's where the Uniform Mortgage Data Program was really born. Two pieces of that were the Uniform Appraisal Data Sets, which essentially is taking the appraisal data that's on the form and standardizing that data. So what does that mean? So for example, if an appraiser was asked about the quality of a loan, they could answer that question in many different ways. The quality could be referenced as good, poor, average. Some appraisers said that the quality was brick. And so there was really no standard definitions of what questions were being asked on the form. So there was a considerable amount of time and effort that went into standardizing the data on the appraisal form. So quality now is one of 6 different definitions, as opposed to free-forming before. Condition of the property is now one of 6 specific definitions. There are drop-down boxes for specific questions. So the GSEs really spent time and effort, so when a question was asked, there was a limited range of answers that they were looking for. And the reason why they did that is because they wanted to make sure that everyone was speaking the same language when it came to appraisals. And they did that because if they could then get that information, they could actually use it for risk modeling and analytic purposes, which leads us to the portal. So the Uniform Collateral Data Portal was built by Veros, supported and still supported and maintained by Veros. And the portal does 2 things. The first thing it does is says, hey, look, the standard was established through UAD, so we want to make sure that the information coming through the portal meets the standard that was created. So there's a series of edits that go on to make sure that the data coming through meets the standards that were provided by the GSEs. And the second thing that it does is it allows the lender to transmit that data to the GSEs such that the GSEs can get that data and they can use it for risk modeling and analytics. So the third piece of that, which isn't on the screen here, which is the policy that FHFA mandated to the GSEs, which said, now that you have these data standards and now that you have this portal in place to edit against the standard and to deliver the data to the GSEs, we're going to force you to make sure that every one of your loan submissions has this data attached to it. And that's essentially what was implemented back in the March of 2012, where the portal went up and went live, and at that point, every loan delivered to both Fannie and Freddie needed to have this appraisal data as part of the loan delivery data set. So since that go-live date, I'll just give you some basic stats. There are about 28,000 users of the portal. There's over 5,000 lenders set up to use the portal, and over 16 million appraisals have actually gone through the portal, and those 16 million appraisals that have gone through and all of their comp information now makes up the database that the GSEs have the ability to use to manage their risk associated with collateral and appraisals. Moving on to the next slide, talk a little bit about the results now that the portal is up and live and the data is flowing through since March of 2012. That database is just extremely valuable because it has just a ton of really good information that the lenders or that the GSEs reference as they're doing the risk modeling and analytics. So, go back before the crash, there was no due diligence on the appraisals coming through prior to loan delivery, purchase, and securitization. Now what Fannie and Freddie have the ability to do is they have the ability to take in all that information on the appraisal before they purchase a loan, before that loan is securitized. And because they have that rich database to leverage, they now can form an opinion about that appraisal and determine if it's something that they think has low risk, has some risk, has a high degree of risk before they purchase it, and they can, and because that portal is a two-way mechanism for data to come in and messaging to go out, they now have a means to communicate back to the lenders their view of that appraisal. So, for example, appraisal is created by an appraiser. It goes against the UAD standards, and we make sure those standards have been met. The lender then transmits that information through the portal to the GSEs. The GSEs analyze that data essentially real time, going up against the 16 million appraisals that they have in the database. They're looking at what comps were used for that appraisal, what adjustments were made for that appraisal, and they're really trying to derive what is the value of that collateral. Once they do their analysis, they can send messaging back to the lender. They can send messaging back to the lender and say, wait a second, this is so bad, I'm not even going to let this loan go through. We're not going to purchase it. You need to go back and relook at this appraisal because we're just not comfortable. We think there's a high degree of risk. Or they can come back and basically say, look, we're not going to stop the delivery process, but here are some things that we think you should look at on the appraisal just to double check to make sure that they're accurate. And if some of those things are severe enough, they actually may take that appraisal and still let it come through the system and still let the loan be delivered to the GSE, but they may send that appraisal to a department, a QC department, that they're both establishing, so they have a separate set of eyes looking at that appraisal with real appraisal experts in there to make sure that there aren't any issues. And if there are, they want to identify that quickly so they can go back to the lender and say, you know what, we bought it, but we have some major issues with the appraisal. We want you to repurchase the loan. Now, the bulk of the loans coming through and the appraisals coming through are A-OK, there are no issues, and the GSEs purchase the loans, and they won't have any issues with that appraisal. But it's really the ability to identify those high-risk appraisals which is really enabling the GSEs to better manage their collateral risk and cut down on those credit losses that I referenced earlier. Okay, on the next page, 2 more points before I turn it over to David to start looking at some of the micro views and some of the specific tools and processes that exist out there. One is that this has definitely put the GSEs in a superior risk management position, and that has enabled them to change their business model in terms of how they enforce representations and warranties. So prior to the crash and prior to this process being established, the GSEs have what's called life of loan reps and warrants, where over the entire life of the loan, if they found an issue with the loan, they could go back to the lender and ask for repurchase. And that caused a lot of friction with all of the delinquent loans and loans that went in default. There's been a lot of arguing go back and forth between the GSEs and lenders in relation to these reps and warrants. Because they have this superior technology now and are leveraging this to manage their risk, they've actually cut down from a life of loan rep and warrant model to a sunset rep and warrant model, which means that essentially the GSEs have 3 years to figure out if there's something wrong with the loan, and if they don't find anything the matter with the loan, then the reps and warrants sunset and the lender's no longer on the hook. Now there are some exclusions to that, and we won't go into that, but that's essentially at a high level what the change in business model is. David will touch on a lot of the other things on this page, so I'll turn that over to him. But the last point that I want to make on the next page is that it's not just the GSEs. So this is actually the announcement that came out from FHA on March 19th, 2014, and are essentially putting their lenders on notice that they've partnered with Veros. Veros is going to build a very similar portal for FHA that we had built for the GSEs. FHA has already adopted the Uniform Appraisal data set, so they've already established the standards out there and followed the GSE's lead on that. So they are now going to be in a position in 2014 and 2015 to essentially do what the GSEs do, which is bring in standardized data, improve the risk modeling analytics, and to a certain degree, and will be built out over time, provide messaging back to the lenders regarding the appraisals that were submitted. So, and last point, and some would argue that from an FHA standpoint, it's even more important for FHA to have this capability because of their business model of 3% down payment, financing the mortgage insurance premium. You're essentially left with a 100% or close to 100% LTV loan from day one. So knowing the collateral value on day one and making sure it's accurate, given that it's already going to be high LTV loan anyway, is extremely important. So That's establishing the foundation at the macro level. We just wanted to make sure we built the foundation before we went into some of the specifics. But with that, I'm going to turn it over to David, and he's going to go over some of the specific items that you should be thinking about as you're managing this risk.
Thanks, Chuck. So as we go and continue with these slides, we're going to jump into the operational breakdown section. And as Chuck has described, UCDP, when the GSEs rolled out UCDP, they had some decisions to make. And some of the choices were how much and how fast, and how would this impact the industry. And so they had some approaches, some workflow process to work through. And as you consider the size and scope of UCDP, you have to consider how this would be implemented. And they could have taken some pretty significant large steps in order to immediately or over time implement a lot all at once. But instead, what they did is wisely chose to make smaller steps, step by step. So if you're familiar with UCDP at all, you're familiar with the forms vendors coming on board very early in the UCDP process. There was training and describing access points, whether it be the web portal or direct integrations into the system. It was working with multiple lenders and vendors of all sorts to make sure that that automated integration and that submission into UCDP was set up in such a way that the industry could absorb it and take it and start submitting these appraisals, these electronic appraisals in a straightforward fashion. Chuck talked a little bit about UAD and the transition from warning messages to hard stops to fatal edits that take place now. We're seeing more of those edits take place in the future. And recently, it's also been identified that the PDF access, the PDF submission of these electronic appraisals is going to be retired and go away. So in a few slides, I'll get into a little more detail on that. But the purpose of this slide is to talk about UCDP, the small steps, the gradual steps that have gotten to this point, and then the perspective that from an operational standpoint and from a system standpoint, the system will continue to be enhanced and modified over the months and years ahead. And so what we want to do now is encourage the lenders and the vendors to realize that these are permanent solutions that are going into place, and that hopefully they already are well down that path of implementing their own automated and efficient appraisal strategies to maximize these portals. So we're talking about UCDP. Chuck mentioned the EAD from FHA as well. And so realizing we're in this world, we need to make sure that we're taking the right steps along with the GSEs and FHA and other government entities that are embracing these electronic appraisals. So with that, with the improved efficiency of these electronic appraisals, lenders and vendors want to improve the speed and quality of your appraisal submission. If you haven't put much thought into how you're submitting these appraisals and what kind of review you're doing of these appraisals before it goes into UCDP or EAD, you want to take into consideration what's available and what's out there already. So some questions you want to ask is, how are you submitting the appraisals right now? If you have a low volume, a manageable volume, you can submit those through the portal. You can just upload those. It's a pretty straightforward fashion. Many of you might have vendors that are already integrated, whether they be your appraisal ordering and review platform system that you're already integrated with and utilizing right now. There's LOSs that have this access. Many AMCs have access into UCDP. And so there are a number of vendors that are already well down this path and can provide tools and systems to assist you in this process. The other thing you want to take into consideration is, are you running any kind of either internal or external third-party quality checks on these appraisals as it comes into your system? Hopefully, you're taking advantage of this electronic data now, so as your AMC or as your appraiser or whoever you're receiving these appraisals come into your system, wherever they're coming from, hopefully there's some checks right up front where you can check on the completeness of the appraisal, the compliance of the data that's within that. And then hopefully there's some other checks to look over the overall quality of the appraisal as it comes into the system. Again, there's internal processes you can put in place if you have those systems already, or there's a number of vendors that provide these automated systems ready to go that hopefully you can take advantage of. And then finally, what you want to consider is how are you tracking your appraisals and your submissions as they go into these electronic portals. Are you actually seeing it? Are you taking advantage? Are you tracking it according to which appraisers, which AMCs you're using, the quality of the appraisals that are flowing through your system, who's giving you better data, who's giving you less than great data? You want to take advantage, you want to identify that, track that, report on that in an automated fashion so you can, again, adjust your business accordingly. You want to maximize the good and reduce the areas where it has potential a little more risk. Now, as you look at this slide, one important point here is neither the lender nor the appraiser vendor wants to be flagged with repeated and unsuccessful submissions. There's no good that can come from sending the GSEs problem appraisals repeatedly. If some get in there, the GSEs have some checks, they'll go through, they'll push it back as check described. On occasion, that's not a problem. But if you're routinely just throwing every appraisal you get without looking at it right into the portal, it's going to be flagged, it's going to be identified, and you're going to have some conversations with the GSEs as far as the quality that you're submitting. Now, I've mentioned, as you look at this slide and these bullet points, I've mentioned a number of these things. There's automated submission portals that are available that are already integrated into the system. There's web-based platforms that can preview the edits, the UAD edits, the data within that appraisal before it gets submitted into UCDP. There's appraisal scoring tools, which I mentioned before. So the takeaway here is to make sure your platform is up to date with current status messages and the ability to quickly adapt when new round of message changes are released. Again, that's the point here. The UCDP, the portal, the rules, everything about it is continuing to be enhanced and modified and progressed. So you want to make sure that you're plugged in an automated way so you can take advantage of that and you don't have to manually go through and fix these things yourself. Another point that I mentioned briefly a little bit ago is the PDF extraction will no longer be available as of July 13th, 2014. So that's coming this summer. And then when I speak about the PDF extraction, I'm specifically talking about the UCDP in-portal PDF extraction that's currently available. So right now, Veros manages this process. As of July, that's going to go away. So specifically, the GSEs just recently announced, and this is their wording, they said the GSEs will only accept MISMO XML submissions in the UCDP beginning July 13th, 2014. On this date, the PDF extraction service in UCDP will be retired, and the GSEs will no longer accept appraisals submitted in PDF, ACI XML, or AI-ready file formats. So bottom line is we're looking at MISMO only. So the goal here, obviously, if you're not doing that right now, if you're currently submitting PDF, that's fine. You can continue now through the summer, but you want to start putting in process what will your plan be. Now, as you look at these slides here, how can I get there? You want to evaluate your options for a standalone PDF extraction service. Those exist outside and will continue to exist outside of UCDP. So there are third parties, including Veros, that will provide that service outside of UCDP. However, that's not a permanent solution. The GSEs clearly want this XML, MISMO standard XML. So that's where we all need to be working towards. And so if you consider systems that provide that right now, again, as mentioned before, there's systems, there's appraisal ordering systems. Your LOS have many of these access points as well. The AMCs now can provide this MISMO XML standard. So you want to make sure you're working with your providers to make sure that you're receiving this format as early as possible in preparation for that July date. And then again, we can assist as you get to that date of how to make that as seamless and easy as possible. So you want to become acquainted with evaluation management systems that are out there today and determine how big a gap you have and start working towards that. As we move on and talk about the blacklist. Now this slide is for speaking purposes only, and anytime you raise the term blacklist, it certainly has a stigma associated with it. But this is just to emphasize a very specific point. And Chuck mentioned this before again, but I want to emphasize it. With the ability to analyze the appraisal data comes the ability to track those who do not uphold quality standards. So this data is going into the system, this database, and it is being tracked. So after the submission appraisals can be tracked at the appraiser, at the AMC, and at the lender level. So be aware of that. The GSEs have that access. They're looking at, that's the purpose of this portal in the first place. So they're really focusing in and taking advantage of the data that they're receiving. And as I mentioned before, as a lender, you should be doing the same thing. You should be understanding where your appraisals are coming from, the quality of those appraisals as they come into your system, who the appraisers are, or at least your AMC, and the quality of that data that's coming into your system. What you don't want to do is submit your appraisals blindly into UCDP and have the GSEs be your first line of appraisal quality. That'd be a big mistake. You don't want to have them play your QC role. What you definitely want to do is understand your process. Again, apply it in your own internal review procedures. Use a third-party quality system as well, but you want to take advantage of what's available, and don't let the submission of someone else's poor quality work to reflect you in a poor way. As we go on to the next slide, this is how we stay off the watch list. We take advantage of everything I just described. The automated tools that are available, the completeness and compliance tools today. And today's automated appraisal risk scoring tools, these reports that are generated, they're quite a bit more sophisticated today than they have been in the years past. And in years past, they primarily focused on the completeness of the appraisal, the data that's provided within it, the compliance to make sure it looks good. But today's systems really go past that in an automated way and can look at the credibility of the underlying data. Do the values look good? Do the comparables look good? Are the adjustments appropriate? Is the complexity of the property? How is a tract home? Is it cookie cutter? Or is this a custom-built property in a rural area? And it identifies, these types of tools identify the risk associated with these appraisals as they come into the system. Now what that allows a lender to do is route these to the appropriate review procedures, whether that be their internal or external review appraisal staffs, whether it be automating the completeness process to roll those through and ultimately submit into UCDP. All that's possible according to the rules and specific understanding that those type of systems have and are utilizing as they review their appraisals as they flow through the system. So that's the emphasis. You want to take a look manually or in an automated fashion in an objective way, these appraisals that come into your system. Now, many will say that the AMCs, if you're receiving appraisals from AMCs, many will say that they do their own QC checks before it's submitted back to the lender, and they do. Good AMCs will go through that process and review that data of that appraisal. But can't emphasize enough, what you definitely want to do is have a third-party objective view of that appraisal as it's submitted. Just a clear set of eyes, and if it's ready, then you can submit it right into UCDP. You shouldn't have any problems, and you'll stay off that watch list. And then finally, to emphasize again, all roads lead to the electronic data delivery system. UAD has been adopted by Fannie Mae, Freddie Mac, FHA, VA, Ginnie Mae. UCDP is a permanent electronic appraisal solution. We understand that FHA is rolling out theirs, and Chuck gave you some guidelines from timing. That'll be start to be rolled out at the end of this year. Definitely will have a big impact in 2015. So these are permanent solutions. And from a lender standpoint, and from a vendor standpoint as well, we need to make sure that we're implementing tools now that will provide a permanent solution, an efficient solution, and a compliant solution as we submit these appraisals into the system. Taking advantage of the system for the GSEs, strengthening that relationship of what's sold with the GSEs, and also understanding that and getting your house in order from a lender's perspective so you can report back to whoever is looking over these reports, understanding these appraisals, the collateral as it comes into your system and as these loans are made, and ultimately as they're submitted into UCDP. So basically, we want to make sure that you're taking a logical, straightforward approach to provide all parties, the lender, the appraiser, the vendors, the GSEs, the highest quality and most transparent collateral approach available to date. And with that, I'll turn the time back over to Chuck.
Thank you, David. On page 19 of the presentation, so I'm going to go back to the macro view. And I think that this page from macro view may be the most important page that we talk about. So the question is, why does this matter? And the reason why this matters so much is because it's not going away. UCDP, UAD, the ability for the GSEs to collect that data, analyze it, provide messaging has been extremely valuable to them. It has been a huge success. And so the risk that they had in terms of collateral pre-market collapse is essentially gone because they have all of these tools and mechanisms in place to better manage that risk. So it's not going away. And in fact, it's only going to expand over time. So expansion is going to be in the form of FHA building their portal and matching the risk capabilities that the GSEs have. It could be in the form of the GSEs expanding the messaging that they provide back to the lenders because they will continue to get more and more data coming in every day. So that 16 million appraisal database is growing every time a lender submits a loan to Fannie Mae. So they will have more information. That information is going to enable them to tighten up their risk monitoring and provide more specificity in terms of the messaging that they provide back to lenders. So this is not going away. It's only going to expand over time. So the 3 bullets on the bottom of the page really, given all of this and given where the GSEs are and knowing where they're going, the question is, how well are you positioned given where the GSEs are going? And David outlined several tools, systems that can help you better manage the entire appraisal process, and those are things that you should seriously consider, again, knowing where the GSEs are today and knowing where they're going in the future. Skipping to slide 21, again, the concept of standardizing data and collecting the data for risk modeling and analytics is here to stay. And so I wanted just to, and these are all fairly in the infancy stages, but the GSEs are using the same concept for now other parts of the loan file. So I know that the GSEs are working on information and standardizing the data around the closing data, the HUD-1. That's extremely useful information for them as they try and figure out cash flows at the time of closing and determining the risk based on those cash flows, interested party contributions. There's a lot of very valuable information on HUD-1. So they are looking to standardize the data and to be able to capture that data at delivery and essentially use that data like they use the appraisal data. And then similarly, they're doing the same thing on the loan application. So there's a lot of very valuable data on there, but it hasn't been standardized, and it's really not being leveraged today. So if the GSEs are successful at standardizing that data, are able to capture that data, again, same concept, better data coming in that can be used for risk modeling analytics. They're going to build databases over time. They're going to use that information to better manage their risk. So those are just a couple of examples of how what happened with UAD and UCDP will continue to broaden in the future. So the last page really are 4 things that we think that you should consider based on the conversation that we had today. So the GSEs on the appraisal side are looking at the data, analyzing it, and coming up with their own opinion on the value of the collateral. So given that, should you be looking at a test appraisal scoring tool such that you have insight to that before it goes to the GSEs? That's something that we think that you should consider. You know, given where UCDP is today, knowing that they're now tightening the process in terms of the data coming through, PDF extraction services being discontinued, they're reducing the number of forms that are coming in. They're only going to require the MISNO XML form coming in. So they're trying to tighten the data that's coming to them. Are you positioned, given those changes and where the GSCs are going, are you well positioned to be able to manage those changes? If you're not getting UAD preview messages today, you should think about getting those. That will help you manage the risk prior to submission to the Fannie Mae, to the GSCs. So those are things that you should consider as you tighten your risk analysis process with respect to appraisals. In terms of the third point here, just know that FHA is coming on board. And I think because when the GSCs rolled this out, David went through this whole thing about how they started off in small steps, knowing where they wanted to get to, but they were going in small steps along the way. They provided a long lead time for implementation. FHA is going to do the same thing. But knowing what FHA is doing, knowing the similarities and the differences between what FHA is doing and what the GSCs are doing will help you manage the implementation process. I firmly believe that long implementation processes lead to a smooth rollout. The GSCs did it. It was a very smooth rollout. FHA is going to do that as well, but now you have two similar processes out there. Just know they exist, know the differences, know the similarities. It will help you have a smooth rollout when FHA does roll this thing out and make it mandatory. And then finally, there are tools out there, and you should think about analyzing and looking at some of these tools, and they're really designed to look at the entire appraisal process, all the way from the start to, you know, ordering the appraisal, managing all the appraisers that you have relationships with, the quality control that's done when the appraiser provides a finished product, the submission to the GSCs, the receiving of those messages from the GSCs, the resubmission based on how you respond to the messages that the GSCs provide to you. There are tools out there, and David referenced one, that can help you manage that entire process. And given the focus that the GSCs have on appraisals, and given the focus that FHA is going to have on appraisals, you may want to take a look at that entire end-to-end process and make sure that it's bulletproof from the start all the way through the end. So with that, that concludes the presentation. Hopefully you found the information that David and I presented as informative and can help you better manage your business and better manage your risk. And with that, I'm going to turn it back over to Beverly.
Thanks so much, Chuck. I just wanted to thank Chuck and David for a great presentation today and for so much informative, a great informative webinar. So I want to thank Veros Real Estate Solutions for sponsoring this webinar, and I hope to see you at the next one. Have a great day, and thanks for attending.